Hello, welcome back to my channel. If you're new here, my name is Sarah, and on this channel I make videos that help you to become the best version of yourself and achieve financial freedom. If that sounds like something that you'll be interested in, then make sure to hit the subscribe button, turn on your notification bell to stay updated for my next video. Today I'll be talking about Bitcoin technical analysis, and I'm so excited to be able to teach you guys this skill because it is one of the most important skill that you can ever learn as a trader. Once you're able to master this skill, then trust me, all your trades will become profitable. If you are as excited as me to learn this skill, then stick around to the end. Let's get right into it. Alright, so I'm gonna try my best to make this as easy and understandable as possible, and we'll try to keep it short. I don't want this video to be too long. Alright, so I'm gonna head over to Tradingview.com, and Tradingview is basically the place where you will be performing most of your technical analysis. So when you go to tradingview.com, you'll come to this page. This is the main page, and then you want to head over to chart, which is at the top left right here where I'm pointing. So you go to chart, and right now I'm looking at Bitcoin. This is Bitcoin. As you can see, my chart looks very jumbo, it's like all over the place. But right now, all this might look a bit confusing for you, or but trust me, when I was getting into trading, it was the same for me. I would look at this and I was so confused. I'm like, okay, what is happening? Like, what does all this mean? I didn't understand any of it. But then as soon as I started learning, just like you are doing right now, I started to understand what everything means. And I just want you to know that with everything that I'm going to teach you today, you will be able to master it if you apply it and start practicing it every single day. Like, that's the key. It's just practice. If you're able to practice these skills enough time, you will become a master at it. I truly, truly believe that. Okay, so we're going to be looking at Bitcoin today. Let's start by talking about candlesticks. So these things here you can see are called candlesticks. And at the top here on the left side where it says 4 hours, this is the time frame that I am currently looking at. So this means that every candlesticks that you see here represent 4 hours. This candlestick here represents 4 hours. So when I touch this candlestick, you can see at the top, there's at the top here, like right here, there's numbers, a bunch of numbers and a letter that's displaying, and it changes once you switch to a different candlestick. Now, these numbers that are appearing at the top, whenever you touch a candlestick, it's representing something. So the O, it means open. It means that, and that price O right there, that price that's beside the O, so if I touch this candlestick, that O means that is the price that this candle opened at in that period of 4 hours. That's when it opened, right? And the H stands for high, and that is the highest price that the price went to in this time frame. This candlestick time frame, it went to that price. That's the highest price it went to. L stands for low, so that is basically the lowest price that this candle went to at that time frame. And then C stands for close, and that is the price that the candle closed at in that 4 hour time frame. So each candle represents 4 hours because I am on the 4 hour time frame. there are different types of time frame. There's 1 second, as you can see, 5 seconds, 15 seconds, and it can go all the way up to 1 month. So if I click on 1 month, now you see the chart is a bit smaller, right? Because you know, a month is a long time. So as you can see here, each of these candles represent 1 month. So this, the one that I'm touching right now, is May 1st. So that whole candle shows the price of Bitcoin from the beginning of May to the end of May. So when May started, the price opened at, you can see at the top, 688, and then the highest it went to was 59,654. The lowest it went down to was 28,688, and then it closed at 37,243. So as you can see, Bitcoin basically crashed in this candle. But anyways, now I want you to let me explain to you what the colors mean. The blue candles represent the price is going up, right? And then the red candle represents that the price has gone down. Okay, so the blue candle shows us that the price has gone up, and then the red candle shows us that the price has gone down. Now, what determines whether a candle closes at a blue or green, and whether it closes at a red? What determines that? Well, let me explain it to you. So basically, when a candle first opens, if the candle opened at a low price, like this candle that I'm holding right here for July 1st, 2021. So this candle here, if a candle opens at a low and then it closes at a higher price, then that candle is going to be green. Vice versa, for the candle to be red, the price has to have opened at a high and then it closes at a low. That will make the candle to be red. So that's basically what determines the colors of the candle. So now that you understand what this means, how can you use this knowledge to be able to trade? There is different time frames, as you can see, and these different time frames are telling you the direction that the market is going. When you are trading, always before you start your trade, when you come to this chart on Tradingview, you want to start out by looking at the longer time frames. Ideally, I would say start by the 1 day time frame and then move on. So 1 day time frame, you look at it, try to determine what trend that the market is at, and then you move on to the 4-hour time frame to see what is really happening, and then afterwards go to the 1-hour time frame, and the last time frame I would suggest is the 30 minutes time frame. And these time frames are best to use if you are day trading. If you're day trading, it really helps you to really know what is the best place for you to enter the market. And this is the thing I've learned in my past times of learning how to trade. I learned that the best way to be 100% profitable is to enter at the right time. When you are able to enter at the right time, then your trade will for sure be profitable. But if you enter at the wrong time, then it's really hard for your trade to be profitable, right? And what helps you to determine what is the right time to enter? Well, it's the shorter time frames. When you look at the shorter time frames, so you know the bigger time frames, it's showing you what the overall trend is, right? but when you go down to the smaller time frame, like say the 1 hour, it is showing you what direction that the market is going. So let's say, for example, on the 4-hour time frame, okay, let's look at this. I'll zoom it. This is okay, so this is 1 day, sorry. So this is 1 day time frame, and as we can see here, that on the 1 day time frame, Bitcoin here was in a downtrend. And how do you, to figure out what a downtrend is, basically the price is setting lower highs and lower lows. That dictates that the price is in a downtrend. So as you can see here, it went from this is the highest it was at, and then it started going down, retraced a little bit down, retraced a little bit down, and then here, this just happened like a few days ago, the price of Bitcoin just, you know, shooted back up, and it looks like we might be back in a uptrend, but it's not really guaranteed, because if you can look at this week here, it is telling us something else, you know. It's the price got rejected badly in this week, so it might be a reversal. Anyways, so when you look at the longer time frame and you see the trend it is in, okay, we're in the downtrend. Okay, so the strategy that I want to show you for day trading, I'll try to keep this as easy as possible. I feel like I'm you know, I'm finding it hard to find the right words to say. But anyway, so when you're starting your day, you come at this market, you look at the daily time frame, and then you look at the last daily candle, and you see what direction is it going. Is it at a green or is it at a red? You look at that, and then say, okay, so like this one here, I can see it is at a green. And then another thing that is important is wicks. Wick is basically the price. So like this candle here on July 26th, you can see it went all the way up to 48K, but it got rejected badly, and then it closed at 37,218. It closed there, but the candle is still green because it closed at a higher price that it opened at. Now, because since it got this huge rejection here, it left a big wick. We call that a wick. And that wick tells us that the price tried to go up to that point, but it got rejected. The sellers took over and they sold and sold and sold, and that's why it left this big wick. Now, when you see a big wick like this, it can tell you that the price is trying to go there, but it couldn't. So it means that the next candle that starts most likely should be red. That's what I have noticed from my observation, is that the next candle must be red. So as you can see here, this candle, the latest one for July 27, is still at a green, but I believe it's going to be a red because the previous candle had a long wick. So this tells me that it's going to be red eventually. And yeah, so this candle represents 1 day, and as you can see on the right side here, there's about 7 hours and 26 minutes left for this candle to be closed. So after looking at the 1 day time frame, you want to go to the 4-hour and try to see what direction the market is going. So as you can see, I went to the 4-hour. I see here that this candle here, the latest one, is red, you know. And this 4-hour candle started about, it's been about 30 minutes, 34 minutes since this candle opened. And this candle here will be closing at around 2 p.m. Mountain time. Yeah, 2 p.m. Mountain Time. That's when this candle here will close. All right, let's get into the sweet stuff. So once you look at the 4-hour time frame and you see what direction that the market is going, the next thing that you want to do is go to the 1-hour time frame. And in the 1-hour time frame, you want to jot your support and resistance line. What is support and resistance? Basically, support and resistance. So let me tell you what support is. Support is basically the price that Bitcoin bounces back from. Okay, so let's look at this one here. The price was going down, 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 and then it stopped. Like for this one here, you can see it stopped right here at the top here, and then it bounced a little, but it didn't go as high, so it went back down. And I can see this, we can call it a support. Let me draw the line here. So we'll call this a support. Oh, frick. Okay, I guess I can now use it. Okay, sorry guys. I currently can't use the tools on a free account. But anyways, yeah. So we were at the 1-hour time frame. So we'll call this a support. Okay. So support is basically the price that the Bitcoin and any other cryptocurrency that you're trading bounces back from, right? You can see it comes down to this price and then it starts going up. Now resistance is the price that it's getting rejected to go over. It's like finding a hard time to go over that price. That's the resistance. So once you're able to figure out the support and resistance, it can make your trading so much more easier, because now you can be able to just place your trades based on the support and resistance. So basically, how you will trade this is, if once you figure out the support and resistance, you now just have to wait for the price to hit this, either the support or the resistance, and then you place your trade. So let's say, for example, we say that, okay, this is the support. It looks like it is the support. So if the price comes here, you can guarantee that it's going to start going back up because it is the support. It has tested it once, and now if it comes back again here, then you can place a long, which is saying that you're betting that the price is going to go up. And then you exit at the next resistance, which is like right here. However, you don't want to exit exactly at where the resistance is. Usually I would say a couple hundreds below, couple hundred below. So I would exit from here instead of right exactly at the resistance. So because sometimes it doesn't go all the way at the resistance, right? Sometimes it does, sometimes it doesn't. So I would exit like about right here, and then just wait for a confirmation that it's getting rejected at the resistance. And if it gets rejected, then you can short it all the way down to the support. And again, with the same thing with the support, you don't want to exit exactly at the support. You want to exit a little bit above the support. Now, how do you know that the price got rejected at either support or resistance? So for resistance, how you can tell that the price got rejected is basically the candle that touches the resistance. If it closes at a red, that is a big sign of rejection, and you can confidently place your short there and take your profit out here. And then The other way to know is if the next candle that comes after the candle that touched the resistance, say the candle that touched the resistance closed at a green, then the next candle that starts after it closes at a red, then that's another sign that the price got rejected, and you just have to wait for that candle to close. If that candle really does close at a red, then you can confidently place your trade from there and take your profit down here. And now for the support, it is the opposite. When the candle that touches the support closes at a green or blue, then that says that it's been supported, and that means the price should start going back up towards the resistance. The other one is if the candle that touched the support, say it closed at a red, but then the next candle after that closes at a green, then that tells you that the price got supported there and it should start heading back towards the resistance. So that's how you're able to figure out how to enter through support and resistance. Now there's one other thing that I want you to keep in mind is, now once you've confirmed that the price got rejected, say at a resistance, then the best possible way for you to enter your trade is to wait for a retracement. So basically, when the price gets rejected at a resistance, usually the next candle after that will retrace back a little bit towards the resistance. It will retrace a little bit, and if you want to make the most out of your trade, you want to enter at that retracement. Don't enter just because the candle closed at a red at a resistance. Doesn't mean you should just enter right away. I've noticed that the price will retrace a little bit, and you want to enter when the next candle retraces a little bit. So let's say like this one here, this candle here, you can see for July 26 at 1 o'clock. You see this candle here, it got rejected at a resistance, right? But I would not place my trades once it closed. I would place my trades when the next candle starts and it retraces back. You can see here it retraced a little bit up here, and I would enter there. Now you don't know exactly how far it's going to retrace, then that's why you want to just say wait for it to retrace maybe I don't know, 1 or 2% back towards the resistance, and then you enter your trades there, you know, and then that's how you can make profit. So that's what support and resistance is, and I hope you're able to understand that. It's very, very easy to spot support and resistance line. And also, another thing you need to keep in mind is that Bitcoin is very volatile. The price, just no matter how good of a technical analysis that you do, there's one thing to always keep in mind, and that is the news. When there's some certain news that comes out, it can automatically just cancel out all of the technical analysis that you did, because people just start selling or buying based on the news. So you have to keep that in mind, and that's why I prefer day trading over long-term trading, because I feel like it's less risky, because I don't have to keep my trades up for longer, and I'm at less risk of losing my money, right? So you need to keep that in mind. If there's a certain news that comes out that, oh, Bitcoin, this, that, and say the price was going up, and you're 100% sure that it's gonna keep going up, but then this bad news about Bitcoin comes out, the price would just revert and starts crashing. And the opposite is true. If the price was going down and then suddenly there's some good news about Bitcoin, then the price would just boom, pump, start going back up. So you need to very, very be careful when it comes to that. And When I am trading, I try to keep my trades open for at least maximum an hour. Sometimes it can take longer if I enter at the wrong time. But if you enter at the right time, then your trades, these strategies that I'm showing you, should take approximately an hour maximum. Now, when you're doing your technical analysis, there's other things that you need to include, which are called indicators. Indicators help you to determine when to enter and when to exit your position. So, yeah, indicators is what there's so many indicators out there, and I recommend that you find one that you really like, that is working for you, and then you stick to it. Right? So indicators tells you, oh, now it's a good time to enter, now it's a good time to exit. And basically, if you're using indicator, then it can be helpful. You know, indicators can be helpful, but I would say you shouldn't 100% rely on indicators, because sometimes they can lag, and sometimes there's some indicators that can give you false information. So you need to be very careful. Like right now, I have this indicator here. You can see at the bottom, it's RSI. It's Relative Strength Index. And this indicator, I've been using it for a while, and it's been pretty good. So how this indicator works is basically, now let me just show you how you can get the indicator first. So to get this indicator RSI, so let me exit this one here, take it off, X. If I want to get indicators, I go here at the top where it says FX. You touch that and you search the indicator if you know the name. So the one that I was using earlier is Relative Strength Index indicator. So I clicked on that and you can see it popped here at the bottom. See, so that's how you add an indicator to your chart. Now, let me just explain how this RSI works. So basically, depending on what time frame you're looking at, so they say that if this line here you can see on this indicator, it's basically showing you the price movement of the currency that you're looking at. So now, if this line here, they say, is at, if it comes to if it comes at 30, if it is at 30 or below, then it means that the price of that currency has been oversold, and you should expect the price to start heading back up, right? And if this line here is above, if it's at 70 or above, it means that the price of that asset has been overbought, and you should expect the price to crash back down. That's basically how it is. So depending on what time frame that you're using, because it's different for every time frame, right? For the 1 hour, you can see it's right here. For the 4 hour, it is at the top. And for the 1 day, it is also reaching the top. So obviously, if you're using it on the longer time frame, it's more accurate, I would say. It means that the price definitely should start going back down, because the market tends to follow what the longer time frame is saying. So at the 4 hour, you can see that it's been overbought, and that's why the price is slowly starting to go down. 1 hour time frame, it's already closer to being down. So if you're using this indicator here, RSI, on the shorter time frame, and it's showing you that it's going down, and if it's here, yeah, if it's at this price, it means that, yeah, it's been overbought. However, if you're going to use this indicator in the shorter time frame, then just keep in mind that you should not stay in your trade for long, because this is a shorter time frame, right? Like, although it's showing that the price has been overbought, during that period of time, it will go back up, but not as much as you think, because on the longer time frame, it's showing that it's heading back down, right? So just keep that
in mind. There's another indicator that I really I've been using and I really like it, and it's the natural Spool indicator. Let me put it. Damn it. Anyways, I think I'm gonna make another video about this indicator another time. But this indicator, it basically tells you when to buy, when to sell, and it's been so reliable. Like, it's always like about 90% accurate. I've been using it, and it's been so amazing. So if you want to get that indicator, the natural Spool, it does. You can get it at this site here. I'm gonna put it down below. You have to purchase it. Unfortunately, you know, nothing good comes for free, so yeah, you have to purchase it. And once you do, trust me, you're gonna be able to make your money back, because it's definitely reliable. Okay, guys, I think I'm gonna end it there for today. I hope that all of this strategies that I've showed you today will help you now to become a better trader and perform correct technical analysis. That is my hope. So just keep in mind, before you start trading as a day trader, you want to start out by looking at the longer time frame, 1 day time frame, right? Try to determine what direction that the market is going. And then afterwards, you want to look at the shorter time frame to see what is really happening, right? And then you look at the shorter time frame to be able to spot your support and resistance. That's where you will spot your support and resistance. It's at a 1 hour time frame. So basically, to spot your support and resistance, you just need to see what is the highest price it went to and then it got rejected from, and what is the lowest price it went down to and it bounced back from. So when you can spot these, then you can just draw a line on Tradingview. Here on the left side, there's trend line. You just click on that. You can just draw a line. You know, draw a line. Let me just remove this. I don't know why it's glitching. But you draw a line at the top, the highest price it went to that it got rejected. And then you draw a line at the lowest price that it went to and it got rejected from. Okay, that's what you do. And then now, when you are looking at support resistance, another thing I forgot to mention, you want to look at it as a zone, not as just a line. So when I look at here, this highest price that it went down up to, you draw the line at the the highest body candle, the highest body of candle that it closed at. You draw your line there, and then the highest wick, you need to also draw your line there, because it becomes a zone. Because sometimes the price may enter here and then it gets rejected, or it may go all the way here, it gets rejected. As long as if the price enters this zone, it goes higher than this price, and then it just keeps going up, then you know that it didn't get rejected, right? It's going to go up. So you want to look at it as a zone. So basically, you draw the line on top of the highest wick, and then another line there, and there you have it. So now this area is a zone. So it means that if this price goes here, enters this zone, doesn't matter where, you just want to see that it got rejected. And to know that it got rejected is to look at what color the candle closes at. If it closes at a green, then you know it didn't get rejected yet. But if the next candle after it closes at a red, then you know that it got rejected, and then you just have to wait for that candle to close and then enter at the next candle all the way to the next support. And remember, you don't want to exit your position exactly at the support. You want to exit a little bit above the support, just to be safe. Okay guys, I think I'm going to end it here for today because this video is starting to be a bit longer than I expected it to be. If you found this video to be helpful, then make sure to hit the subscribe button if you're not already subscribed, and leave a comment down below if there's anything that I missed that you wanted me to go over through. Then I will make sure to do that on my next video. And if this video was helpful for you, let me know in the comment section down below. Thank you guys so much for tuning in to the end. I really appreciate you. And I just want to say this, that remember that practice makes progress. I've been able to learn all of this through practice. I committed to learning and practicing trading every single day, and this is how I got to this point. So it is the same for you. If you want to be able to master this skill, you need to apply all that I taught you today and start practicing it every day as much as you can. There will be times when you will fail and may feel like giving up, but do not give up. Just keep pushing through and you will eventually succeed. Thank you for watching, and I look forward to seeing you in my next video.